The following is a presentation of TFNN. Live at TFNN, the Money Masters. And now, your Money Masters, Tom O'Brien and Steve Rhodes.
Welcome, folks. Steve Rhodes, Tom O'Brien. We appreciate you being with us today. We have Dow down 57, NASDAQ off 29, S&Ps are off 9. We get gold up 8. You get bonds up 16. King dollars up 6 ticks. The euro's down 23. And the bottom line, we'll see whether we get the volume on the way down. We'll see whether, what you're going to have here is that you're either going to get the volume, you're not going to get the volume, you're going to get rejection or not. And if you don't get the volume,
for sure,
that's going to go for the 27th highs.
Yes.
So, we'll see where this baby shakes out.
Well, last night we had the Bulls and the Bears looking over the edge.
I love it. The Bulls and the Bears looking over the edge.
Because that is what we had last night going on. That's the image that's on my screen, folks. I love this image just simply for that standpoint, because when it comes to trading, if you're looking for some of the best entry points, it's really not the exact price that you're looking at. You're looking for a range, and you're looking for a range when you've got everything is up against your back. And last night, you had both cases, because you had the Dow futures get up over the October 27th high.
Good. I didn't even see that. Oh, that's awesome.
Okay.
That's great. That's what we needed.
That's right. So the futures got up over the October 27th high.
They're funny-looking bulls, by the way.
Yeah, I know.
You see what he did to you bulls out there, folks? Look at those bulls. They're the weirdest-looking bulls I've seen for a while. Go ahead.
I got that from a there's a German artist that does some stuff for the DAX. And so that's where I got
No wonder why the DAX is down.
It is. But absolutely, when it comes to trading, when you're looking for patterns that you want to trade, and my preference is not to be able to chase something going up or down. It's to look for a pattern. It's ahead of time to know what it is that you're looking for.
Right.
And then when you get there, it's just simply the ability to be able to pull the trigger.
Yeah,
and that's what stops most traders, dead in their tracks.
Absolutely.
Even folks that, I'll teach about patterns and say, okay, project, here's where it is that we're looking for. And so the day before, be like, okay, this is great, this is the game plan. And then when you get there, all of a sudden, you freeze. Well, is it going to go further? Is it, and the answer is we don't know if it's going to go further or not. We just simply know this was the pattern that we were looking for. This is where you're out over the edge, and you go ahead, and if you understand the expectancy of your trading system, you pull the trigger.
Well, it's wild, folks. Is that yesterday when we're on, of course, I'm short the euro, and Steve's bringing up his euro chart, so he can bring it. He says, well, of course it's going to go up there, and of course, last night I'm saying to myself, look at that thing, because bottom line, it goes right to where it was supposed to go.
Yeah.
And then gave it up. Thank God.
No, it
did. But it was amazing. I was looking at this. I was saying to myself, "Oh my God."
Well, what folks want to look for is you just simply want to be able to trade charts, because there's so many different vehicles that you can trade. Right. And what you really want to do is you want to take a look at a chart, a vehicle where you've got repetitive patterns that are going on. It doesn't have to be the exact same pattern. In this case here, you've got Gartley buy, Gartley sell patterns.
Yes.
And they just simply are completing, because that will then give you just that little extra edge.
That's right.
We're always looking for just a little extra edge. And you want to make sure you've got wide enough stops, because we don't know exactly where it's going to stop. We know what the range is. Or you want to watch a bar that just simply says, hey, the buying is over. Just, the bar just gets really tiny as you get up into that area. And that's just a helpful way to be able to identify fear and greed, and then put on the trade. And and right now, what's really important is just simply the way that it came down from there. It could be setting up an ABC down, which would then be setting up this 3 drive to a bottom. Now, if it sets up this 3 drive to a bottom, we should see a big move off of that.
Right.
Or if it fails, that's the other side of the trade. If it fails, then it's telling you that there's a lot lower price. It doesn't mean that this pattern here is going to set up, but that's really the next one that's out on the charts that are out there.
No, it's huge. This morning I was listening, and folks, the key to understanding, what we're doing here is that it's wide open. There's no black box here, so we're showing you where the patterns are. Steve's showing you where the patterns are and how you can correlate and make money on them.
Yeah.
This morning on CNBC, they had the guy that runs Avenue. Okay, he's a monster.
Big fun.
Now, what happened, folks, is this. Now, this is where it's really intriguing, and just in the context of the interview.
Yeah.
Guy, good interview.
Yeah.
And they kept pressing him about where his money, is, right?
Okay.
And he was explaining that, 60% of his money is in Europe. Okay.
Yeah.
Now, what happened here, folks, is this. This is really crucial to understand, though, is that when he was explaining the deal, he was explaining to them, they kept pushing about the equity, right? And he was explaining that, well, listen, if you're in the equity deal, if the market gets hit, it's going to be, bad, right?
Right.
And what people, I don't think, got out of it, the bottom line, what I want you to get out of it is this, is that what he's talking about is something that most folks can't do.
Yeah.
He's talking about, and this is what these big hedge funds do, folks, okay, is that they were buying debt, and he was buying debt at 60 cents on the dollar, and he was buying top-line debt. And what that's about, folks, is this. It's about liquidity over there right now and solvency over there right now.
Absolutely.
So that's a whole different ball game. I'd take that risk in a second, but you don't get those opportunities,
Not as an individual investor.
No, you don't. Right. You know what I mean? So my point here is that when we look at patents, you have that opportunity every single day.
That's right.
Versus,
exactly.
There's going to be people that listen to that interview and say, "Oh, I got to go buy Europe." That's not the same. It's not even close.
Right.
They're not buying something 60 cents on the dollar.
Yeah, that's right. Yeah.
And then the second part, this was so that was him, and then they had a real estate guy on. And this one was absolutely hilarious. Now you gotta watch this one. This one here. So the interview was going across, and bottom line, he ended like this. He ended that he doesn't want the administration or the Federal Reserve to do anything else. He thinks that people that they're messing with the economy too much, right?
Yes.
But his last sentence, right? He says, well, except for real estate. So you got to remember that everyone has an agenda out there. I just cracked up.
Yeah.
They were saying that, they were getting emails in there, Barry for president and all this stuff. And it's such a joke, folks, because it was hilarious. All he was doing,
because he's pushing his real estate.
Yeah, he was saying no to everything else. And then if you go listen to that blurb, the last thing right before he says, except for real estate. They have to do something for real estate, and I believe they do too. But I'm just saying, I just cracked up. I says, oh my God.
Yeah. Well, I think you're bringing up a really good point. Many good points. Okay, but one of them that I'm gleaming out of it is that an individual investor can't get the same deal.
Right.
Some of these are other larger, hedge funds or what have you.
Right.
But yet and also a lot of folks would like to be able to. So I'm going to correlate this. I'm going to try to correlate this. Is a lot of folks would like to be like Buffett. Trade like Buffett, right? But you can't get the same deal. Well, actually, you can. You're missing the point. The point here that I want to make is that when Buffett goes out and buys companies, and you can go study, you can go look at his annual reports or what have you, that what Buffett does have is he has trust in the companies that he's buying. He has trust in the CEOs. Just like Tom has complete trust with me. He could ask me to do something, and is there even an inkling of trust? None, right? Yeah. And so when you have trust, what you also have, folks, is you have speed. Because when you don't trust something, okay, do things get done faster or slower?
No, you have to think about it. You don't want to
slower.
Think. Right.
Okay.
Right.
And so when we take a look at these patterns, so I'm going to correlate it. If you want to be able to trade like Buffett, you go take a look at the past companies that he's purchased. The due diligence that he's done on those has been like 20 days, 29 days, 30 days, something, not 6 months. You go take a look at other companies out there. They don't trust the folks that they're doing. Okay. And true stories. He'll interview the CEO and he'll say, "Can I trust the numbers inside these financial statements?"
Exactly. Right.
Can I rely? He'll ask it 3 different times.
Yes.
Okay.
Right.
And the CEO is there or what have you, and saying yes. And he's making a judgment.
Yes.
Okay, based on how you've answered that. Well, if you want to be able to trade and have that same thing, you've got to be able to trust yourself when it comes to trading. That's the whole correlation that I want to be able to make. So whether it's these patterns or something else, something that Tom teaches or Basil or whoever, David, is that if you want to trade like Buffett or any of these other guys, it's a matter of trusting yourself. Because then at the speed, then you can be like a robot and you can take the trade.
A tiger.
That's right. So you can be like Warren Buffett.
Oh, yeah.
But what I want to do is take his best trait, which happens to be understanding that with trust, that the speed at which you're able to react is in a heartbeat.
No, big time. And
how's that for correlating something?
No, it's real. That's why we're bringing it up.
I know,
mean, it absolutely is real. Now, what's really cool, folks, is that they haven't done it. Bloomberg just did a study, and it came out this morning, about the euro and the market. So right now, the coefficient is 83%.
Oh, absolutely.
You know, and it's interesting. I guess it seems like it's almost more, but 83% is pretty heavy.
Yeah.
You know.
Well, the euro on this pattern here hit at 2:30 a.m. And this is like a 30-minute chart,
right.
okay? And if we go over to the futures, if I pull up the futures on the Dow futures, 2:30 a.m.
Right.
So I mean, of course, it is. It's like 100%.
And that's why.
I mean, you can trade the market. If you were going to trade the ETFs, the doubles, the triples, or what have you, you have to trade them off of what's going on inside the currency market.
Yeah, for sure.
You got to trade it off, and you trade it off of the euro because it's the biggest portion of the basket.
Yeah, big time. You know what I'm going to do? After we get off, whoever did that, I'm gonna go over to them and ask them to go do one for the U.S. dollar for us. They'll do it. They'll do it too.
Okay, in Bloomberg, yeah.
Yeah, they'll do it. You know, because it's advantageous to all their subscribers too. But 0.83, that's pretty intense, man.
Yeah, and if you're looking for a piece of information to be able to help your trading, I mean, then that's the one. And if that's what helps you to maybe start to understand currency pairs that are out there, and like I was saying to the listeners this morning, by the time, and in 2:30 is an important time frame on the euro because you've got London is online, so you've got the biggest houses from a currency standpoint are out there trading, and so at 2:30 they were saying, I don't want to hold on to these euros. Sell. We got it up here. Sell. Which is really what happened out there.
It's amazing. I mean, and what we're going to see. So they're meeting tomorrow. Today's Wednesday, right? So they're meeting Thursday and Friday. And
they're always meeting.
They're always going to be meeting.
They're always meeting and trying to push something else out there.
They're meeting and they got nothing to meet about because they got nothing to eat. They're eating their own.
Well, I thought it was kind of interesting was, I think it was last night they were pushing, at some point in time yesterday, right? They were pushing out that we're not just going to have one fund that we can't fund. We're going to have two funds we can't fund, if you will. And I just smiled. Now, and watch the market behavior. The market responds to those things. But, the reality, the real world is really just taking a look at the charts and watch what happens out there. And I don't know anything more about it other than what they tried to push out there.
Right.
And I just had to smile. I had to laugh, actually.
Well, it's wild. Okay, so picture this, folks. The way that they could get saved, right, is that Ben Bernanke comes out and gets an announcement flat out to say, listen, we're going to take over the world.
Our printing presses are idle.
We're going to take over the world.
Yeah, that's right.
And we're going to do it. Now, you never know. I mean, that probably is on the table somewhere. I mean, it sounds bizarre, but the reality is that you're going to find, if we found out anything last time, the big companies are running the deal. The bank's running it, so don't be surprised.
That's right.
Right now, the charts are saying no. Right now, it's saying it's not going to happen, and that's probably because we got an election coming up, and they don't know what to do.
Yeah.
Steve Rhodes, Tom O'Brien, you stay right there, folks. We're coming right back. You get the Dow down 56, NASDAQ off 29, S&P's off 6.5. We're going to be right back.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
Give the gift of silver. This holiday season, TFNN and Great Panther Silver want to give you the gift of silver. From now until December 30th, TFNN will hold a drawing once a day, 5 days a week, business days only, and one lucky entrant will receive one of these beautiful coins that we will mail to whomever you desire. Winning one of these extraordinary coins could not be easier. There's no contest and no gimmicks, just a simple drawing, allowing you to give the gift of silver this holiday season. Go to the front page of TFNN.com for details.
Is the fast-moving investment world challenging the way you think about managing risk and return? You don't have to go it alone. Directions Alternative Strategy Funds feature built-in tactical management to help you find clarity for the path ahead. Direction Funds. I'm with X. To learn more about Directions Alternative Strategy Funds, please visit TFNN.com and click on the Direction Funds banner or call 877-434-9363. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Funds carefully before investing. The prospectus contains this and other information about Direction Funds. The prospectus should be read carefully before investing. To obtain a prospectus, go to directionfunds.com. Investing in index funds may be more volatile than investing in broadly diversified funds. The use of leverage by a mutual fund increases the risk to the fund. The more a fund invests in leverage instruments, the more leverage will magnify gains or losses on those investments. Distributed by Rafferty Capital Markets, LLC.
Hi, folks. Steve Rhodes here. Tom O'Brien and I need your help. Together, let's change the cash for gold industry once and for all. Now is the time to unleash the game changer, and that's you, folks. We've all seen the power of viral marketing. It's overthrown dictators, and now it's time to rid the thieves in this cash for gold industry. Together, we can change this industry in a heartbeat. You know about our industry-leading payouts, our free tools, our video valuation, and the education that we provide to help folks value their jewelry. Tom and I are experts and the industry's most trusted team. Please join us now by spreading the word to your entire email list. We'll pay you 5% of the total payout, which on average would be $50 per transaction. 100 transactions is $5,000 in your pocket. We'd rather put our marketing dollars in your pocket and more money in your referrals pocket. Go to TigerMetalExchange.com and click on the Become a Partner button to join our team. Let's start a revolution, folks. We can't do it without you. TigerMetalExchange.com, the only click you need to make.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's just wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. Steve Rhodes, Tom O'Brien. We get the Dow off 70 right now. NASDAQ off 32. S&P's off 11. And, you know, this 1245 S&P is going to get interesting. Because what you have, folks, is that we're 20 points off the highs of last night. You break that 1245, we get some conviction, you're going to be down another 20 S&Ps, which will put some real juice under this, real conviction under this move here.
And you know, hey, it's we've had a nice volatile market. You know, we've already had a 200-point move on the Dow.
Right.
You know, in the futures market. Okay, from the high got up to the 12,244. You're trading. Well, you've had more than that. You're trading 12,071. So you've had
And, you know, folks, they got it up there last night with absolutely nothing. They were just bring, and then boom.
Absolutely.
See ya, don't want to be ya. Took it south and took it south big. Let's go over and take a look at good old Apple. So Apple, we're doing 2.9 million. That's not going to be enough. That's interesting, though. You're going into, well, actually, it is going to be enough. You're only going into 13 million. So, okay, so they're selling Apple. So check this out. This is going to be interesting. So, yeah, you're at 3 million. Man, that's easy. You're talking about 18 million today, and you're going into 13 million.
Yeah. So tell folks, you know, as when you're taking a look at a chart like this, okay, as a stock is moving down and it's not, you know, at a swing point,
right? You
know, how you still are taking a look at where it's currently trading versus where it's trading into. What does, you know? What
I'm always looking for is this: is that, you know, we speculate as to where things are going to go.
Yes.
But as soon as they're going into it, what I'm looking for always, folks, is just a supply and demand curve, period. Okay?
Yep. Okay.
And what I've found is that if you take your crosshairs and say, okay, what are you going into?
Yes.
And if that acceleration is heavier, man, they're sellers.
Okay, so in this case here, you'd be looking at the December 1st candle.
That's right.
Right, and say, okay, we're trading inside of that now.
That's
on the way
right.
back down. And, if we close inside of that candle, even with more than 13, well, it doesn't matter whether we close inside with more or less, okay? Let's just, in the scenario, if you close into it with more, it's telling you the pressure is to the downside.
And you go into the bottom. Well,
Okay.
first, if we look at all of Apple, right?
Yep.
First,
Yep.
we know that at the lows at 353,
Right.
at 373, at 354, rather, you got monster volume versus the highs.
Right,
So that's
right,
what wants to go on the longer basis. On the shorter basis, because you're basically saying, okay, where are we going right now?
Yes.
Okay?
Yes.
And on a shorter basis, it's like golden, man. You're going into that candle, you're going into that bar.
That's right,
And
yeah.
you have accelerating volume.
Yeah.
You're saying, hey, man,
Yeah.
it's real. It's
Yeah.
real. It's going downtown. And what I've found is this. So that bar, folks, has 8 points.
And that's really important piece of information I want you guys to understand out there with regard to how you look at it.
Yeah, because it's easy.
That's right.
It's
Yeah,
really
that's right.
easy. You're just saying, okay, hey, it's going in there. It has more volume. There's more sellers, period. And you don't have to,
And you're just looking at it as a retail store, as a...
That's the same thing.
That's
Man,
right.
you're getting out of town, man. They're saying, see ya, don't want to be ya.
Yeah.
Now, that bar has 8 points in it, right?
Yeah. Okay, right. Yep, the spread.
So what happens is that if you only go 2 points into it, which we are right now, that's not saying you go to the end.
So you're
right?
looking to really pierce into it.
Yeah. Like
Okay.
once you start with 3 points out of 8, it's
Yeah.
like, oh, you're going to the bottom, man.
Okay.
You
So
know what I mean?
that's the second
That'd be
piece
the
of-
next part.
Okay.
Right? And then what I do next is that I say, okay, now the acceleration, how you come into it, would tell me that, okay, we're going to get to the bottom. So let's say right now it's saying you're going to do 18 million. If you do 18 million, that's telling me that, hey, we're going to 371.
Okay.
Okay? If that lightens up at the end of the day and you're only doing, 14 million, we're going to 13, it's like, oh, no, hold it, man. The sellers are already dead.
Okay.
There's no sellers. And if there's no sellers, folks, it's not going down.
Yeah.
That's the reality.
So in your case here, unlike a swing point, okay,
Right.
if you close into that bar on lighter volume,
right.
that's not suggesting that you're going to go test the bottom of that bar that you're in. Whereas in a swing point, if you close inside it with lighter volume, you can go test the bottom or the top, whichever way it is.
Well, if we closed inside that bar 3 or 4 points, we'd go to the bottom.
Okay, with lighter volume.
With lighter volume. Even with lighter volume, we'll go to the bottom. But then you'd get a bounce right out of it.
Yeah,
you should.
yeah.
Do you know what I mean?
Yeah.
Now, on this one here, what you also want to do is that you have to go over and you go to the top of the high volume low.
Right.
Now, the top of that low, folks, is a huge swing. The 27 points.
Absolutely.
381's the high.
Yeah.
354 is the low. So what you're also looking for, if you're a bear in Apple, what you'd love to see is this. You'd love to see it come down to about 383.
Yes.
Stop before the 381.
Yes.
And wakes up in the morning
That's
feeling good, ready to go, man.
Right.
Yeah,
That's
because if you, the market's just like you and I. That's all it is. Picture it. We're all the same. You're breathing. You're getting up.
Yeah.
If you're feeling good in the morning, if you attack this thing at 4 o'clock or 3:30 in the afternoon, folks, you're too tired.
Yeah.
You attack that thing at 9 o'clock in the morning, watch out.
But I think it's great because if folks can understand that correlation just simply on a daily basis, what's going on, and whether there's a sale.
Yeah,
right?
No,
it's like walked into a retail store and is there a sale going on?
That's right, big time.
Yeah.
Steve Rhodes, Tom O'Brien, you stay right there, folks. We'll come right back.
Hi, folks. This is Tom O'Brien. If you want to get great trade setups in the equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in the complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com under newsletter. Hit the Market Insight tab for your 2-week free test drive right here, right now.
Did you know that the price of gold is up over 24% this year, while the GDX, the Market Vectors Gold Miners ETF, is actually down 1.4% this year? Not all gold stocks are created equal, and not all gold stocks move with the price of gold. In October, Tom O'Brien recommended a buy of FCX in his gold report, and only 6 trading days later advised his clients to close the position, profiting almost 22% in this one trade. During the same 6 trading days, the price of gold was barely up 5%. Tom O'Brien's weekly newsletter, The Gold Report, gives investors the inside edge they need to profit in this gold market. Each Monday morning, Tom issues a gold market update at around 9:30 a.m., then issues a full report each Tuesday afternoon. For as low as $75 per month, you can gain access to Tom O'Brien's Gold Report. To order your gold report with a free 30-day trial subscription, log on to tfnn.com today or call 877-518-9190.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes a carefully selected portfolio can lower your volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angelo O'Brien, financial advisor and certified financial planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks, to Steve Rhodes, Tom O'Brien. And listen, everything's cool, folks, okay? This European Central Bank may announce tomorrow, folks, that they're going to take measures to stimulate bank lending. 3 Euro officials with knowledge of policymakers' deliberations said today. The bottom line, folks, the Euro banks don't have any money.
Yeah,
this is such a joke.
This reminds me of us in 2008.
Oh, it's unbelievable. It's absolutely hilarious. They're going to do more lending. They don't have any money, folks. Okay, they're broke. They're busted.
They're going to loosen the collateral criteria.
Oh,
they're going to say, we'll give you. You can even take more leverage. Is that the deal?
It's amazing. Is that The amazing thing is that they keep saying the same things. You think that, but you know what? That goes to show that whether it's the Wizard of Oz, these people are living in a different world than the real world.
Yes.
Than the world of their citizens, than the world of you and I.
For
They're
sure.
absolutely living in a different world. They're living in a different world because they just keep getting paid and have benefits and could care less.
Yeah.
Yeah. And they're zombie banks. There's no doubt about it. One of our tigers saying in the den, they're absolutely zombie banks.
Yeah.
They have no money. It's just blows my mind, man.
Yeah.
And you know what's so cool? You can learn so much in the time that we're in, though. You absolutely can learn so much.
Yeah. Yeah.
You know what I saw today, and this is pretty disgusting, folks. The amount of money it costs to get educated, whether it's in the world or in the U.S.,
okay,
and how much folks are getting out of it after the fact, meaning, getting an MBA.
Sure.
And it's just amazing. I mean, some of these young men and women, they're in debt. I was reading a story this morning.
Oh, yeah.
So some of them folks, you lined up to be in debt for like 20 years.
What are they in debt? $100 grand or
100 grand?
Yeah,
100
which
grand.
Is
Is a huge amount of money and not much
you're
money.
Paying the interest on it, even if it's 4% or whatever they might be paying.
Exactly.
It's a lot.
It's a lot, and they're coming out and they're making
in a competitive environment from a job standpoint.
That's right.
Especially if they're going out after those folks who are typically going in there that are getting MBAs are not going into commission-oriented sales positions,
exactly.
right?
Exactly.
That's not necessarily the trade school that they went to.
Right.
So now you're dealing with salary type positions.
That's right. That's right. Well, you know what they were saying. Now this gets really interesting. You remember, whether it be ITT Technical Institute, those types of
trade schools,
ads that you saw.
Right.
What happened in the 80s and 90s? They'd be having all sorts of ads, and a lot of those people wouldn't make what they had to pay, right?
Yeah.
But the reality is now the large institutions are into that in the same way. They're telling these young men and women that, hey, listen, you get an MBA, you're going to make more money. When it's not a fact. It's not even close.
Well, maybe more money, but not more enough to take care of what it costs you to,
the debt structure.
But then at the same point in time, out in the competitive market, what you want to be able to have is you want to be able to have a skill set better than who it is that you're competing against.
Right.
So it becomes kind of one of those little catch-22 areas. But I say the easy thing, folks, for you folks that have got kids that are coming out of college that, they've gone there, you've helped them finance, or however they got there through those 4 years, turn them on to the money game. Turn them on right now at this young age. We can teach them. No, we absolutely have got all the resources and the ability, and and at this stage in their life, they haven't created the successes that they've had. Sometimes success actually holds people back from taking action.
Yes.
Because when you've been through that process, all of a sudden you say, "Wait a minute, I've got something to lose."
Right.
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 When you're young, it's like any window that's open, you jump through it.
Oh, totally.
For the most part.
No, it's really great what you're talking about.
Right?
Totally.
So if and this is what I try to say to people who say, no, I don't want to play the money game right now. I want to be, in essence, I want to wait until I've earned more, until I've become more successful. And I say, wait a minute, you're just actually putting up a roadblock, because when you get there,
makes no sense.
Yeah, you won't jump through the window. You're going to be scared about losing what you've got.
No, I know. Live in love, not live in fear, baby.
Absolutely.
You stay right there, folks. We get the Dow down 73, NASDAQ off 35, S&P's off 12. We're going to be right back.
Give the gift of silver. This holiday season, TFNN and Great Panther Silver want to give you the gift of silver. From now until December 30th, TFNN will hold a drawing once a day, 5 days a week, business days only, and one lucky entrant will receive one of these beautiful coins that we will mail to whomever you desire. Winning one of these extraordinary coins could not be easier. There's no contest and no gimmicks, just a simple drawing, allowing you to give the gift of silver this holiday season. Go to the front page of TFNN.com for details.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650. I should get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
And I'm very happy.
Well, I appreciate it. Now, did you sell us jewelry or did you buy coins off us?
I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yeah, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com.
We're going to close it, and all of a sudden, it was big money. Welcome back, folks. We get the Dow off 72 right now. Nasdaq's down 34. S&Ps are off 11. And, Steve and I were talking about this 1245 S&P. This 1245 is a big one, folks. We get down there with some juice.
Yes.
It looks like it wants to test the 1247.50. We'll see whether it gets juice to get back inside that range. Because, coming down 20 S&P points is a lot, no doubt.
Yeah, for sure.
The market's been open an hour and 15 minutes. I mean, that's taken from 2:30 in the morning to get down here. But
yeah,
now you got liquidity inside the market. So
Yeah. Well, and they just put out the press release that they got to solve with the banks.
No
right?
No doubt, man. No doubt.
Apparently that press release didn't get out to too many folks.
I'll tell you, it's just absolutely amazing. Well, you know what, too? When you go over to Switzerland, it's going to be interesting. So what Switzerland put out this morning is that they're thinking of going into net negative rates.
Yeah.
That they will charge people to hold money in the banks in Switzerland.
Yeah.
Okay, and what they're trying to do, folks, now, what's amazing is that they've killed the franc as it is, but they want to kill it more.
Yeah.
The franc just went from 70 to 92. They intervened in the marketplace. Now they don't want money. They get this money.
So what do you think is behind that logic, if you will? So
you get all the watch companies over there.
Okay.
Huge export business.
Yeah.
And it's killing them. Flat out. Do you know what I mean? And,
Oh, okay. As far as trying to weaken the currency.
As trade, yeah. They want to weaken the currency.
Okay. So okay.
Yeah. All of a sudden you have these watches that cost 50 and 100 grand anyway.
Yeah.
And now they're 200 grand in correlation to what it is. It's like, hold it, that doesn't work, man.
So you're suggesting currency wars?
Yeah, big time. King dollar.
Oh, I know.
Let's go to Bob in Reddington. Hey, Bob, what's going on?
Well, I'm looking at SLV for yesterday, the daily chart, and I was wondering if Steve would consider the right-hand side of that chart, the one from yesterday, as 3 drives to the top.
Well, let's see here. You're looking at the SLV?
Yes, sir.
Well, ask Tom. He's got it up on his screen right now. Now, you got to turn the sound down in the background. We can pick up that sound. What you're looking at it on a daily chart?
Yes.
I don't see a 3 drive to a. Where are you looking at as far as a 3 drive?
I don't see a 3 drive. The right hand side where it goes from the bottom, which was Tuesday the 6th, to Wednesday the 7th.
Yeah, you need a higher high, Bob. Three drives have each successive higher high.
Well, I'm counting one at 30. One at 31, one at 31.6, one at 31.8, and one at 32.
I see.
Is that? I mean, I'm trying to understand it.
Well,
the question is, if you take a look at the other side of that from Monday, are those 3 drives to the bottom corresponding?
No, you're getting into it too much.
Yeah.
Okay. It's you know, what you have is that, you know, if you look at that first, the 27th, you know, you get that high up there. A 3 drive would get you from 34, you'd be up at 35, 37. And then what you want to do with those, of course, is, as Steve's always doing, you want to know what the retracement is off the higher swing point.
Yeah.
You know, you want both of those to coordinate, basically, whether it's down the bottom or up at the top.
What you like to see too between drives, number one, is you want to make sure that you've got some sacred geometry going on.
Right.
Okay. And so if you're in the den or you're watching on Tiger TV right now, and what we've got up is a 30-minute chart on the euro. Now this hasn't completed yet. This is just simply a projected pattern. So we'll see if it actually does complete. I can during the break or what have you, or I'll go find another one that actually worked. And so between your first drive and your second drive, you had an expansion. You had a Fibonacci expansion of 1.272. Right. Okay? And so in trying to set up the third drive, number one, you want to make sure that you're really close from a time standpoint. So the time, you don't want to force it. Forcing it won't work because it's really not the pattern that's setting up there. So and so you can see that you also had that same type of expansion or what's projected here on this pattern that I have drawn, and then it's giving you the range. You know, it doesn't have to be exact. No, you're not looking for it to be exact, but you also you don't want to force it, if you will.
And what he just said, Bob, I think the most important part, and this is really cool because I've done 3 drives before, watching you how you do them.
Yes.
The most important part of that is that you want the pattern set up with the geometry inside it.
That's right.
Because if you don't have that, you see 3 drives all the time.
That's right.
You know what I mean?
That's right.
But if you have the pattern with the geometry, and it's like, okay, hold it. This is what it. You know, the probability that that's what it is goes up dramatically.
That's right. That's right. Yeah.
On the other side of it, are we looking for silver to tank today?
Well, what's tank? I mean, I don't
think.
Well,
I mean, going down to 30 and a half, 31.
That's tanking. No, you're not going to see a 5% move downtown on silver today. I don't think so.
Okay.
I mean,
all right.
Okay, man. Have a great one. Have a safe one. That's a big.
So here's a 3 drive to a top. Okay, so I know Bob is. We know he's listening because I could hear us in the background.
Right.
And so here was a 3 drive pattern to the top that. A couple days ago, we had some meetings that we were running to,
right?
And Larry was doing his show,
yes.
And I saw this pattern, and so I just sent him a quick little, message and said, "Hey, Larry, looks like there's a 3 drive pattern to a top," and this was on the Great British Pound, Japanese yen. Now, what Tom was also picking up on, if we just simply go from the high swing point out here down to the low,
right?
That where this was also coming together was, right at a Fibonacci retracement area. So, which would have been 122.35. Now, you're looking to be in that range. And what you can see here, you had, now the expansion between swing points on this one was 1.414. That's still a Fibonacci number, that in essence that is out there. You see that, very often. And in fact, if we take a look at probably from here to here, we're pretty close to a 1.618 from where we started this thing. So 1.618.
Yeah.
We're a little bit above it, okay? But what you've got here, Bob or anybody else that's looking, you're looking at really from a time standpoint, it's off by 1 bar, basically, if we took a look at that.
Right.
And so you've got that, you're not forcing it, plus you want to see it. It's nice when it comes, I like it better when it's coming together and you're coming into a retracement area, because what you also had here, you had a 3 drive pattern coming together where you also had a Gartley cell. So when you can get multiple patterns setting up and you've got sacred geometry, oh, baby, give me that trade all day long.
It's a beautiful thing. There's no doubt about it, man. This is Steve Rhodes, Tom O'Brien. You stay right there, folks. We're coming right back. We get the Dow down 45. NASDAQ is off 27. S&Ps are off 6. We'll see whether the S&Ps want to get in and up over that opening bar, folks. I suspect we're going to have a tough time doing that, but you know what? We're going to find out any minute. We're going to be right back.
As Tom says, go long America. Now you can join TFNN and Barnes & Noble to keep money in your community. Purchase Tom's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, before December 31st from your local Barnes & Noble store. And you will be given access to not just 1, but 2 exceptional archived courses. Tiger Scaling, the Tiger Butterfly, and Gartley. The Art of Timing the Trade is more than just a book. It's an educational journey that will help you understand the Wall Street greed cycle and learn how to recognize profit from genuine price moves. So, for the cost of just under $30, you will receive in excess of $300 in trading education from Tom O'Brien, TFNN, and Barnes & Noble. And you will be helping to support an important local business, your local bookstore. If you do not have a Barnes & Noble in your community, then go to your local bookstore. We'll be sure to work with them to keep your purchase local. So let's support our local businesses. Keep money in your community and get a great education. But be sure to act now, because you have until December 31st to take advantage of this opportunity. Go to the front page of TFNN.com for details.
Hi folks, Steve Rhodes here. Tom O'Brien and I need your help. Together, let's change the cash for gold industry once and for all. Now is the time to unleash the game changer, and that's you folks. We've all seen the power of viral marketing. It's overthrown dictators, and now it's time to rid the thieves in this cash for gold industry. Together, we can change this industry in a heartbeat. You know about our industry-leading payouts, our free tools, our video valuation, and the education that we provide to help folks value their jewelry. Tom and I are experts and the industry's most trusted team. Please join us now by spreading the word to your entire email list. We'll pay you 5% of the total payout, which on average would be $50 per transaction. 100 transactions is $5,000 in your pocket. We'd rather put our marketing dollars in your pocket and more money in your referrals pocket. Go to TigerMetalExchange.com and click on the Become a Partner button to join our team. Let's start a revolution, folks. We can't do it without you. TigerMetalExchange.com, the only click you need to make.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio, therefore we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
Catch Basil Chapman, editor of the Chapman Market Line and Trends Watch, as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, up next on TFNN.
Welcome back, folks. Steve Rhodes, Tom O'Brien. Now, it's going to get interesting is that we have volume on the NASDAQ, folks. You're over 400 million already. 400 million will push you into about 2 billion. We get 2 billion on the NASDAQ, and you stay red, you're going to get some action on the way down. So this is going to, the S&P right now, you get that bounce at to 1248. What that has also done, though, on a 10-minute, it's gone from 3.2 million into 9 million. That's saying that 1248 won't hold.
Yeah.
So there's some real action here.
Well, and like you were pointing out, that Bloomberg did a study, and it's basically saying that the correlation, between the euro, U.S. dollar,
83%.
okay. Yep. And so if you just simply, buy into the normal breathing patterns in the markets, and you take a look at the sacred geometry that's out there, folks, you'll see that when you have this Gartley cell pattern that's set up here, that completed at around 2:20, 2:30 in the morning, Now, what you expect is you expect to see it pull back to the 618, 786 area. That's what it does. That's what the euro does. It pulls back there. Then its work is done at least. Now you got to breathe. Okay,
right.
You got to release some air, if you will. And so now all it's doing, it's just doing a normal movement back up to the upside. And right now, where it's gotten to is the 0.382. That's your first area. And it gets up there almost like to the exact tick. If you look at that, I always say, how does that work? Because that's what 133,891, and what does it get up to? It gets up to 133,890.
It's so cool.
Good Lord.
You know what's so cool, and folks, you know what's so cool too is this. Okay, think about it. Think about what you hear out there as to how you should either value companies or pay attention to what CEOs are saying. It's a bunch of garbage. Okay, because the bottom line is that they've proved over and over and over again that they lie.
Right. Right.
Well, you know what? Numbers don't lie.
No, they don't.
And it's like, and we don't know, and you got to be, even, Nobel Prize winners, they know a lot more than we do, of course, in the math structure. But you do know that on a risk-reward basis, or on setting up trade basis, they just keep hitting. They
do.
And you let them hit. You just wait.
That's right.
And if they don't hit, they don't hit. You go on to the next one. There's so many different deals.
Yeah, that's what is so much that I want people to. We talked about the psychology aspect of trading is really the thing that folks have to handle.
Right.
Because I can teach you the tactics.
Right.
The tactics are easy. Now, it may seem foreign, but I can break it down into enough chunks.
Exactly.
Okay, where you're just focused on, one chunk or what have you.
Right.
You get that, and then you move on to the next thing, because it's just like driving a car, the same way when you first learned how to drive a stick shift, okay?
Now, so, folks, you can get Steve's newsletter.
Okay.
30 days, absolutely free.
Yes.
Okay. Now, with the newsletter, though, you do a webinar every week, right?
Every other week.
Every other week.
Yeah, every other. So tonight we've got one.
You got one?
Because of the holiday, we did one last week instead of on Thanksgiving or the day before. Right now, my clients, they send in ahead of time some elements that they want me to be able to cover with regard to their trading.
Okay.
Because, it's an educational process.
With Steve's University.
It's a beautiful thing.
It is. That's right.
Because people want to be able to learn how to do this.
Yeah,
my eyes can only be in so many charts at one time.
Right.
Okay?
Right.
And the whole idea is sometimes... So last night with a couple of our guys in Australia and Europe, we were exchanging charts back and forth on the currencies. And I gave them, some nice setups that had worked out really well.
Right.
And that's just... It's really all about... Look, you have set up... Your mission when you set up TFNN is perfect for me because of what it is that I want to do.
No, I'm with you.
Which is contribute and help people grow.
Right.
And so, and I just, in successful people, they're always looking for new information.
Right.
You're always reading, you're always studying or what have you. Larry is, I am.
Sure.
We listen to each other.
Right.
There's little things that we learn from each other. And so anyway, so that's what the workshops, every other week, that's what it's really all about.
Listen, folks, go out there. You can test drive it right here, right now. This is Steve, Tom. We appreciate you being there. You stay right there. We got our man Basil Chapman coming up next from Newton. We're going to Tucson, Arizona for Larry. David White is coming back here 3 to 4 today, and then I'll take it home from 4 to 6.
Perfect. See you in the morning, folks. Have a great day.